Welcome to today's class. Today we are going to continue from where we stopped the last class, where we did double entry bookkeeping. We are going to answer the questions posed in the previous class before we enter what we are to do today. Now, according to the questions, they were 1 to 5, but here we just number them 6 to 10. Base sales inventory for 12,000 naira. That means, what do? We debit bank and then we credit sales. Remember, in double entry, we have to have two accounts where we debit one and then we credit the other. Now, these are the accounts. Bank is being debited and then sales is being credited. That is sales 12,000 naira, bank 12,000 naira. Then number 7, base sales inventory for 4,000 naira on credit. Sales it on credit. So what do? We debit trade receivables and credit sales. That is 4,000 naira. Why do we credit sales? Because it's on credit. Debit trade receivables and then credit sales. That is it there. Trade receivables are goods coming, monies coming into the company, or that will come into the company later. That means people owing the company, they are called trade receivables. We know them before as debtors, but now they are known as trade receivables. That takes us to sales. And sales, we sell with credit what trade receivables 4,000 naira. That takes us to number 4. Base repays 10,000 naira of the loan. The double entry is now we debit loan 10,000 naira and then we credit bank 10,000 naira. Now this is the double account, debit loan, and then we credit debit loan and then we credit bank 10,000 naira. The next one, base pays 6,000 naira to his suppliers. The double entry will be your debit trade payables and then credit bank. As it is here, debit trade payables, credit bank. 10th one, pays receives 8,000 naira from a customer. Double entry is debit bank and then credit trade receivables. Trade receivables, I've already explained that, right? Trade payables are when the company is owing another, maybe a customer, but when the company is owing, they need to credit money to another account. That is trade payables, what we call creditors. Trade payables. Now, that will take us to what? Number 11, account balances. Now, when we are done with this account, the next thing to do is to balance the accounts and make sure that they rhyme. If we balance the accounts and they don't work together or they are not correct, then we have a problem. That means we missed one where it's not supposed to be. Now, closing balance is whenever a balance is extracted from an amount or a balance is established at the end of a period and the account brought down. Balances on expense accounts and income accounts are transferred to the statement of profit and loss account. So any balance on expense account and income account, those two, remember we have 4 accounts. We have asset accounts, we have expense, we have liability, we have income. But expense and income specifically are transferred to the statement of profit and loss account. Then balances on assets, liabilities, and capital account are forwarded as closing balances at the end of a period to become opening balances at the beginning of next period. That is balancing of assets, liabilities, and capital account. We forward them as closing balances and then take them to the next period as opening balances of the next period. Then balancing account is going to be explained step by step. How we balance account, we are going to explain it step by step so that you will understand. Because when you balance the account, that is what you now use for trial balance. The trial balance is what you use for statement of profit and loss account, and then trial balance is also what you use for statement of financial position. Now, we are going to use the base account to balance account so that you will understand what we are talking about. Now, example is you closed off and bringing down a balance using the above. Step 1, we add both sides of the account. You can see when you add bank, the debit side will be giving us what? 60,000 naira, and the credit side will be giving us what? 53,000 naira. Now, the step 2 now is to do what? Is to bring the balance down and create space. Now, these balances must be on the same side. This 60,000 must be on the same side at the end. Now here we have to have balance carried down. Balance carried down, that is when the money, or yes, the amount to be used to complete what? To complete the credit side, so that it will be the same with the debit side. So we carry down the amount, which is this 60,000 minus 53,000, which will give us 8,000 naira. When we carry out the amount, the 8,000 naira, balance carried down, we add it to this one and it will give us 60,000 naira. Then in debit side, we have to bring, after writing the total amount, we write balance brought down, which is 8,000 naira. When calculating trial balance, it is this 8,000 naira that you make use of. I hope I'm understood. Then let's look at other accounts. Let's look at loan account. The same thing goes for loan account. We have 10,000, 50,000. So balance carried down will be what? 15,000 naira, because this 25,000 naira, that the credit side is bigger than the debit side. So bring balance carried down, which is 15,000 naira, and then we make sure that the account balance, after balancing the account, balance brought down will now be what? 15,000 naira. This is the one we'll use. It is the balance brought down that we use in trial balance. The same thing, trade receivables, 9,000, 8,000. Debit side is 9,000, credit side is 8,000. Where does it mean that we have to carry down, to balance the account, we have to carry down 1,000 naira to balance the account. And after balancing the account, we go to debit side and write what? Balance brought down, which is 1,000 naira. Okay, that's what we are going to use in calculating our trial balance. Now, trade payables, the same thing for trade payables, 16,000, 18,000. So we have to balance the account. Balance carried down will be 2,000 naira. Then that will be 18,000, 80,000. Then balance brought down will be 2,000 naira. The 2,000 naira is what we are going to use for trial balance. We apply the same in the other account. So I would advise you to apply and work on it. Use the other accounts, apply the same thing there, and see if you can come up with a correct balance brought down there. Now, this balance brought down is what we are going to use to prepare our trial balance. A trial balance is a list of all the debit balances and all the credit balances on the account in the main ledger. There is a list of all the debit balances, as I told you, that balance brought down, a list of all of them, and a list of all the balances that the balance brought down in the credit account, in the credit side, a list of the debit balances and the credit balances on the account in the main ledger. So when we're preparing an account, as I told you before, we have to use this balance brought down. Now, the presentation is usually in two columns, one for debit balance and one for credit balance. Now, what does that tell us? Let's look at the following example to explain that. Remember, debit side is usually assets and what expenses, while credit side is usually liabilities and income. Beautiful. Let's look at a typical example. The following was collected from Iyan's account for the year 2012. Let's compute the following trial balance. Let's see what was collected. Capital 370,000 naira. Drawing 10,000 naira. Purchase 2,350,000 naira. Sales 3,500,000 naira. Trade payables 510,000 naira. Trade receivables 490,000 naira. Provision of bad debts 10,000 naira. Provision for depreciation on equipment 170,000 naira. Plant and equipment 500,000 naira. Bank 310,800 naira. Excuse me. Shop 370,000 naira. Insurance 8,300 naira. Selling expenses 300,000 naira. Administrative expenses 280,000 naira. Bank interest received 59,100 naira. And then we are told to compute the trial balance. In trial balance now, as I've explained before, assets and what expenses stay at the debit side, liabilities and income stay at the credit side. So let's start with bank. Bank is at the debit side because it is an asset. Bank is an asset, so bank is 310,800 naira. Capital is a liability. The business is owing the company or the owner of the company capital, so it is a liability of 370,000 naira. Shop is an expense. So it stays in the credit side. Purchases expense, so it stays in the debit side. Debit side in shop. Trade receivables is staying in the debit side because it's an asset. Trade receivables is an asset. Trade payables is a liability. Sales is a liability. Drawings is expense. Provision for bad debt liability. Provision for depreciation on equipment, that's liability 170,000. Then plant and equipment asset. Insurance expenses. Plant and equipment asset, yes. Then we have selling expenses, we have administrative expenses. Then bank interest received is income. So if we calculate it, our trial balance, we make sure our trial balance must be equal. So we have 4,619,100 naira, and the same thing goes to the credit side. If it is not equal, you know that there is something wrong with the trial balance, something wrong with the amount. That's what will bring us to errors in trial balance. But we are not there yet, so let's concentrate on the one we are doing today. If you have any questions, you pose the questions to us. The bank will be pose the questions to us and we will answer you as usual. Now, what is the purpose of trial balance? Why do we need trial balance? Why can't we just go to statement of profit and loss or statement of financial position, which will be done in our next class? I will advise you to go and take possible questions and try to answer them. Go to the Ican diet. There should be a question on page 105. Try to answer those questions, although we'll try to answer the questions at the end of this class. Now, what's the purpose of trial balance? The purpose of trial balance, the first one is it is a starting point for producing a statement of profit or loss or statement of financial position. If the trial balance is not correct, if it is not equal, we cannot produce a statement of profit and loss or a statement of financial position at the end of each accounting year. Then it is also a useful means of checking for errors in the accounting system. Just as I told you, if the trial balance is not correct, if the computation is not correct, that means there is something wrong. There is an error in the accounting system. So we use it to what? To check for those errors. That takes me to the end of our class. Next class we'll be looking at statement of profit and loss and statement of financial position. So I expect you to be ready for our next class, try to answer possible questions, and then we'll deal on this in the next class. If you have any question concerning this, you can bring our notice to it, and we will gladly answer you. Have a nice time and stay safe.